Joining us now is Nasdaq President and Chief Operating Officer Adena Friedman. Adena, good to see you.
It's great to see you too. Thank you.
How do you see the market right now in terms of the uncertainty, the volatility, the wild swings, but still pockets of optimism, thank goodness?
Yeah, there definitely has been a fair amount of volatility in the market this year. And as you said, we had a rough start to the year, but a lot of recovery so far in the second quarter. I think, though, that it obviously has made it so that the IPO market has had a rough start. And we've had 22 companies go public so far this year. That is definitely a low number. The good news is, of course, for Nasdaq, we've had 19 of them come here to Nasdaq. But as we look at going forward into the rest of the quarter, we are starting to see companies put dates on the calendar. They're starting to deal with the realities of what the valuation will be for them so that they can get out into the public markets and start having a public liquidity.
What will change, I guess, because a lot of the decision, it's not just financial, and not just data-driven, it's also psychological in terms of going public. It's like, does management and do the bankers feel like they can get it done and get it done at a good price? Do you see that changing at all? Because it's an election year and it's kind of wild and woolly.
Well, the good news is the Jobs Act has allowed a lot of companies to go out and do some testing of the waters with investors before they have to commit to an actual roadshow and the IPO event itself. And I think that's actually has been really helpful because companies then get to go out and understand what the sentiment of the investors are before they're committing publicly that they're going to go into the public markets. And we are starting to see companies get dates on the calendar, and we see that there's probably some confidence then that there is investor reception to their company.
Absolutely, and I think a good analogy for it is kind of the market performance. We started out the year very weak, and we talked about worst start to the year ever for the stock market, and then all of a sudden we reversed course. We came up to almost new all-time highs. I think you're going to see something similar with the IPO market in that it's been in the press a lot. Not a good time. There's no appetite for it, but there is appetite. We have so many great companies that are started here in New York and out in Silicon Valley, all around the country, that need to tap the public market. So they're going to be doing it soon, I think.
Right. We definitely have an enormous amount of pent-up demand among companies who really want to come to the markets. They've gone through their filing. They're ready. The SEC has kind of given them the blessing. And now it's just a matter of when they think that they can have a good opening for themselves.
I have to put you on the spot. Is one of them, does it start with a U and have 4 letters? Have you guys talked with Uber?
That's all we talk about. It seems like that is one of the only companies that we talk about.
Well, because they're so big and they've changed our lives so much.
Well, there are so many companies, technology companies out there, and a lot of great companies out there. I think Uber's been pretty public with their view that they're not looking at the public markets right now. Our expectation is that there'll be a whole host of great technology companies that are looking to tap the public markets between now and the end of the year.
One area where the financial sector is focusing is technology, but in a different way, and you have spoken recently about the impact on technology on the financial services firms, blockchain. Why is this so important right now?
Well, the blockchain is a very, very interesting technology that could fundamentally change the way that trades settle. In pretty much any asset class.
Back in the day, I was the editor of an operations management newsletter. So let's talk about settlement dates. See, again,
you actually get it.
Yeah, I am a huge nerd. So when you talk about settlement dates and speed of settlement and back office issues,
it matters, right?
Yes, it does matter.
There's a lot of capital trapped in the system from trades that have occurred, transacted, but not settled. So the cash hasn't changed hands yet, and the ownership of the shares haven't changed hands. So in the United States, for instance, it's 3 days. There are other countries where it's 1, 2, or 3 days. So that means that there's a lot of capital trapped in these clearinghouses waiting for that settlement date. If the blockchain can create the ability for you to understand who's buying and selling and who the underlying buyers and sellers are and allow for an expedient transfer of cash, then it allows that settlement date to be pulled up.
Do you think that, when do you think that could happen, like T+2, T+1?
Could be real time almost, right?
So the theory of the blockchain is that it's T+0. So in the Nasdaq private market, we've been experimenting with the blockchain, and we in fact have put a production system in place that has allowed for the transactions of private shares to occur within the day. So a trade occurs and the settlement occurs that day. And in fact, we think that we could do it within 10 minutes if there's demand for that. So it really is a great advancement in technology. It's a matter of applying it to the market. So we're starting with the private market.
Adena, it was great to see you.
Great. Thank you so much.
Adena Friedman from the Nasdaq.